Hey everybody, it's Rob from Gold Silver Pros, and I'm back with a very special guest. First-time guest to the program, John Miniotis, the CEO of Abra Silver. How are you doing today, John?
Doing very well. Thanks for having me, Rob.
So definitely wanted to have you on to talk about Abra because we have been looking at this company for quite some time, and you guys have had tons of positive news. I think 2020 and 2021 has just been a stream of positive news for you guys. But first, wanted to start off with, it sounds as though you've moved to the United States. So first of all, welcome to the US.
Not officially yet, but yeah, I'm sort of been here since April.
Okay.
So still, yeah, the head office is still based out of Toronto. I'm still a Canadian resident, but yeah, I've been enjoying the life here in Florida for I've been in Naples for a few months now.
Sure, sure. So it's hot just like it is in Texas. I don't know if we ever get used to it, but
you have to get used to that. You have no choice.
that's exactly right. Yeah. Wanted to talk about the economy. A lot of stuff has happened. Of course, last year we had the shutdowns. It hurt the mining industry a little bit and hurt the supply chain of the metals as well. You know, problems getting metals to the exchanges, problems with certain jurisdictions, shutting down temporarily. Mints getting the metals to do their coins and bars. It seems as though a lot of that has been alleviated. What's your thoughts on where we are in terms of, the mining situation? Are the miners fully open for business right now? Is everything going well?
Yeah, so in terms of COVID, for sure. We're an exploration company, and we've been exploring nonstop now for well over a year. So we've had no issues whatsoever because of no slowdowns at site because of COVID. So we're operating in Argentina in a very mining friendly province called Salta. And so yeah, there's been no delays whatsoever. I mean, where we have seen delays is just on getting back assay results from the laboratories. So when we drill, we send some core down to independent sort of third-party labs, and there's just been a longer than expected turnaround time to get back those results, and that's been a global phenomenon for well over a year now. So I think that's generally well known. But besides that, I think things are running at a full capacity for us at site. Of course, you take the proper precautions. Everyone gets tested for COVID before they go up to camp. They spend 2 weeks at camp. We actually test them on the way back as well. And so, knock on wood, we've had really no issues whatsoever.
Yeah, it's good to hear that. I think the economy's, since reopening, we've had a bout of inflation here in the US. I think the last print we had, CPI was 5.4 for June. And that's after like a 4 point something and a 5.0 point print the last few months. So we've got trending up inflation, definitely demand for goods and services. But what's your view of inflation right now? Is that a worry for you in terms of where the economy is going? You think this is transitory like the Fed says, or do you think we have inflation to stay?
So we've, had a period of about 40 years now, 50 years maybe since the 70s, where it's been a deflationary cycle. I think that's now clearly turned. I think now we're in a bout of sustained inflation, or what I call stagflation. So I think, the world's really in deeply uncharted waters here, without question. I think there's, record debt levels everywhere you look, and kind of the financial conditions the Fed, the Treasury have created here are, unbelievable. Really, nobody would have predicted this is where we'd be 5 years ago. And so, with the record fiscal deficits being run globally, I think now the U.S. Debt, I believe, is now surpassed 130% of GDP. In Canada, I don't even know Ontario's economy has been closed for over a year now, so I'm not even sure what if they have GDP anymore. But you have low growth, you have rising prices, and I think asset price inflation in particular is kind of at the forefront of that. And so investors are positioning themselves, if you have savings in your bank, or able to get sort of line of credits or whatever, people are going ahead and buying, either real estate or gold and silver or other tangible assets, knowing full well that if they just save money in their bank account with 0% interest rate, that's not a wise move. The value of your dollars in the bank depreciates year over year over year. Now it's month to month. You can see a pretty significant level of sort of inflation in prices, or just the value of your purchasing power being diminished. And so, that bodes very well for silver and gold, and all other real assets, I'd say, in particular.
Yeah, I agree with you. And we've got another 3.1 trillion they're arguing about in Congress right now that the Biden administration wants to spend. It looks like some of the ESG's companies want us to spend more. They want another couple of trillion thrown on. So we're going to land somewhere between 3 and 5 trillion in the U.S. Of course, most of that's going to be paid for by debt. I mean, we're not going to have the tax revenues right now to pay for all that. I think that's going to continue. The spending is going to continue sloshing dollars around. We're continue to have high inflation. I wanted to ask you a little bit about Canada, though. What is Canada doing? Is the government still spending up there as well to make up for the lack of economy that you guys have?
Oh, absolutely. No, for sure. So there's been stimulus checks nonstop, I think, since really the crisis began, I guess. And unfortunately for Ontario, I mean, it's one of the worst provinces just because of the lockdowns. So I think it's likely the longest lockdown really of any jurisdiction in the world, as I'm aware. So still to this day, I mean, restaurants still haven't reopened from COVID, like for dining in. It's only been takeout and, curbside pickup or whatever. But yeah, no, I mean, the government's been keeping these companies afloat for as long as possible and handing out stimulus checks to individuals. And, who knows? Yeah, clearly there's not going to be enough tax revenue to ever pay that off. And so just printing and printing and spending. And, it's past the point of no return at this stage. I mean, at this stage, you might as well keep doing it, right? Like, there's really no way out of it, unfortunately. Once you reach a certain level of debt, like in the US, it's 130% of GDP. You kind of have no choice. So the Fed's backed in the corner, just keep interest rates low for as long as possible, stimulate the economy, and really try to kick can down the road. And, Jay Powell will kick it down until the next guy arrives, and he'll look to kick it on to the next person after that. So, that's kind of the situation we're in. I think as, investors, you just got to take matters in your own hand and sort of, look to position yourself out of fiat currencies into hard assets, really.
Yeah, I 100% agree with you. And I think I came to that realization about 10 or 12 years ago and decided to start Gold Silver Pros in 2018 and not looking back for sure. Really want to talk a little bit about the market for silver. So if we look at what's happening industrially, tons of demand industrially. And then I think you add this year, for the first time maybe since 2016, just huge demand as an investment asset. What's your perspective on where silver is going to go now that we have, Wall Street silver and all this just incredible demand for silver coins and bars?
Yeah, that's right. No, I'd say the silver fundamentals couldn't possibly be much better. So, I'm sure as most of your viewers are aware, silver is used in a variety of industrial application, electronics, etc. That demand, of course, is long-term growth for sure. But then, as you mentioned, on the investment side, it's been a huge surprise, I think, to everyone really in the industry for the most part. We saw that really come into play, I guess, over the past year here. And that's created significant demand for physical silver, which is amazing. And so now you have, incredible demand from the electric vehicles, the green energy demand, solar panels, etc. All of that was always very positive for silver. But now on top of that, you have retail investors buying silver ounces. There's incredible demand there for silver in general. And on top of that, really, silver supply is falling. So silver supply peaked back in 2015, 2016, I believe. So a good 5 years ago now. I think it peaked at about 900 million ounces a year globally in terms of production. Last year, we produced about 800 million ounces of silver. And so the market's already in a deficit situation. Where's all the new supply going to come from? I mean, the other fact is there are no mega silver projects in the wings that are going to come online within the next few years. So a project like ours, so we have a project in Argentina, like I mentioned, it represents, one of a handful or so of high margin projects with good scale. And so, we understand sort of the scarcity value of owning an asset like that, and we're definitely moving it forward as quick as we can for sure.
And the thing that's so unique about silver, maybe more than any other commodity, precious metals or otherwise, is it's so hard to find a primary silver mine in the world. They're like unicorns. Finding one with decent grade, has always been a challenge, and it looks like you guys have one. Why don't you tell us a little bit more about where you guys are looking for silver, and also tell us a little bit about what stage your company is in.
Yeah, so we're in, so it's an advanced stage exploration project. So the asset is called Diablilos. I mentioned it's in the Salta province of Argentina, which is a very mining friendly province. And the project's at what's called sort of the PEA stage, so preliminary economic assessment stage. Yeah, so there you go. You have it up at site. So we already have a large resource base. So we have about 80 million ounces of silver in the ground, 730,000 ounces of gold. So this is one of those few primary silver mines, or not mines, it's a project at this stage, will be a mine in a few years. And so, about 60% of the economics are currently silver, 40% gold. So it's entirely precious metals. We likely actually see that going closer to 50-50 over time. There's just a lot more exploration potential on the gold side of things. Okay. But, an excellent breakdown between both those precious metals. And so back in 2018, there was a PEA study completed that showed very good economic returns here. So over 50% internal rate of return at close to current commodity prices. And that's based on the old resource. So last time we updated the size of this project into a formal resource statement was back in 2018. Since then, we've been drilling for the last year and a half, almost continuously here. We've intersected incredible high grade sort of extensions of this project over significant widths. And so we're now in the final stages of working on an updated resource statement. And so we'll update sort of the size of this project. And then a few months later, we'll come up with an updated preliminary economic assessment. And so we're going to update the economics here based on the updated resource statement. And we think that's a key catalyst for us. And it's only a few months away at this stage.
Yeah, that's awesome news. I love those PEAs. As you may know, I'm a former auditor, so I really like to dive down into the numbers, break out my calculator and see how stuff goes. And I have a lot of fun doing that. And the project economics are pretty amazing. In fact, I wanted to share one slide. One of the reasons that we wanted to have you on the program was this slide in your deck right here, talking about the potential that you have in being one of the highest grade oxide projects. Can you walk us through what this actually means for you guys?
Yeah. So like you mentioned, there are very few primary silver projects out there. Ours is one, and ours, importantly, is within oxide. So it's open pittable. So our deposit's close to surface, which is ideal. The vast majority, I'd say, of primary silver mines or projects are underground. They're within sulfide, so much more expensive to mine and to process. And so our project here, there's a lot more comparables on the gold side of things. So we're actually showing here, if you convert the silver grades that we have, add them to the gold grades on a gold equivalent basis, the grade profile here for an open pit is about 2.1 grams per ton within oxides open pittable. And there's a number of open pittable oxide gold projects out there. And, there's, more than this list. It's not an exhaustive list here, but it kind of shows where we rank. That would be a very high, 2 grams of gold within oxides close to surface would be considered a very high grade sort of open pit, gold project. And so that's, again, one of the reasons why, we have very high margin ounces. So the cash costs, now going back to the silver side of things, if you look at this again from a silver equivalent perspective, cash costs here are about $7.50 an ounce silver.
That's fantastic. Yeah.
So we'll be updating that, of course, but still, it's in the lowest cash quartile, highest margins. So this is a very unique project with excellent economics, and we'll be updating those shortly here.
Okay. I want to talk jurisdiction here with you for a moment. Talk about mining in Argentina and projects in Argentina. How's the relationship with that, and how is the mining sector going?
Yeah, so it really depends on which province you're in Argentina. So it's the provinces. So Argentina is a republic country. It's the provinces that own the mineral rights, and it's the provinces that all have their own mining. They set their own mining regulations, mining legislations. You deal with the province in terms of permitting, etc. And so we're in Salta, which is the most mining friendly province, I'd say. Certainly, according to the Fraser Institute, it was actually ranked as the #1 most favorable, most attractive mining jurisdiction in all of Latin America. So the Fraser Institute actually breaks down Argentina by province and then ranks those provinces to other countries. And so Salta ranked ahead of Chile, ahead of Peru, ahead of Mexico, ahead of every other Latin American jurisdiction. And so Salta's known for lithium operations, and we're surrounded by lithium mines, lithium projects. One of our neighbors, POSCO, is spending about 450 million US, bringing up their lithium operation into full production here shortly. About 100 kilometers away, in Salta again, Fortuna Silver last year completed construction of a major gold project there. They spent $320 million to construct that. And so there's, Salta's been attracting foreign capital for a long time now. And, they have a very sort of concise permitting process as well. So we expect, we've already started sort of environmental baseline permitting work. We started that in Q1 of this year. We expect that'll be completed by early next year, by Q1 2022. So this project is a project that could be fully permitted, advanced to a feasibility study level within the next few years here. And that's very rare for, as we mentioned, there's, a big scarcity of, primary silver projects with excellent economics in a mining-friendly jurisdiction that are ready to commence construction within the next few years.
Yeah, and that's really the sweet spot that we look for when we're looking at mining stocks. My number one favorite target is going to be near-term producers, near-term making a mining decision that have good economics and good jurisdictions, good management teams. You guys are checking off all the boxes that I look for. Those are, statistically speaking, when you look at the mining sector, the highest success projects, the ones most likely to have a positive return for investors. So certainly when you get into early stage exploration companies, you can throw a dart at the dartboard as to what may be successful. But when you get to the stage you guys are at, chances of success goes way up for your investors. And that's when I really start getting interested. So you guys are right there. And I wanted to talk about your milestones. You have quite a few. You mentioned the PEA. It looks like you've got a phase 2 drill program underway, Q2 to Q4. And then you're going to advance toward a feasibility study. So all of those project timelines are going to be very positive for your investors in terms of, helping to maintain your share price and also interest and, attracting additional investment as you guys get closer to that mine decision.
That's right. Yeah, no. So we expect the back half of this year, which we're currently in. So between now and year end, to likely have the busiest sort of news flow the company's really ever had, I'd say. And so, continue to come out with drill results now from this phase 2 program. And so, that's going to continue to come out. But in addition to that, have the updated resource statement announced, have the updated PA study announced. We also have 2 other earlier stage projects, so we expect exploration there will commence before year end as well. So in Chile, we've partnered up with Rio Tinto. Rio Tinto's going to be exploring on our Arcus project. We expect that's going to be sort of in the current second half of this year. And then in the San Juan province of Argentina, we have an earlier stage project as well called La Cuepita, and there we'll commence drilling there likely by October, so I'd say. So, by the end of this year, we're going to have 3 projects all actively being drilled. But of course, Diablilos is the primary asset of ours. And there we're going to have updated economics and kind of should hopefully be an eye-opener for a lot of people who haven't been paying attention, as Diablilos has generally been under the radar, I'd say, of a lot of investors. And we're hoping to change that coming up here.
Yeah, sounds good. And there's one chart in your deck I have to admit I love more than the others. And it's regardless if you're a physical investor or if you're in the mining stocks, this is a great chart because it shows, for everybody who thinks that we may be at the end of the silver bull run, it shows where we really are when compared with historic runs. And we think based on macroeconomics and also fundamentals of the precious metals market, we've got a long way to run. I wonder if you'd talk a little bit about the long-term potential for silver.
That's right. Yeah, no. So when you're in the silver market, and really for any commodity, I mean, the bull markets generally last years, right? If not decades. Sometimes it's 10-year sort of bull run. And so, I think we've likely started what's currently in a bull market. I mean, it doesn't feel like it today. Obviously, the bull market's taking a bit of a breather here, taking a bit of a rest. But in 2019, silver prices increased from $18 or $16 up to $26 where they're at today. So we've had a nice little run, consolidating a bit here. But looking forward, as we mentioned, demand is kind of through the roof, both from the industrial and the investment side. Supply is very much constrained. There are very few primary silver projects that will be built within the next even 5 years. We have very good visibility on that. And so, as investment demand continues to increase, silver supply remains constrained. I think it's inevitable. Year after year, we expect silver prices are going to continue to run here. And so, a few years out, when we expect to be in production, which will likely be around 2024 or so, we're hoping for much higher silver prices. But importantly, I'd say even at current commodity prices, because the cash costs here were, quoted at $7.50 an ounce, even at $26, $27 silver, it's incredible margins. So we don't need higher prices to advance. I think ours is a project that's going to advance regardless of what the silver price does, but you get incredible leverage. So for every dollar silver price rises, the economics of our project based on the old PA study, where the project value increases by over 30 million US for every $1 in the silver price. So if you foresee silver being $10 higher 4 years from now, that's 300 million US of incremental value in addition to sort of the billion-dollar value that the project's already worth. So, great leverage in terms of rising silver and gold prices, for sure. Gold's important for us as well.
Yeah, we've been having a lot of internal investor meetings, myself and other people in the industry, talking about how to get your silver, because the retail price premiums have gotten so high due to the demand for those products. And we know, according to the Silver Institute and their study in November last year, there's going to be demand for over 1 billion ounces this year for the first time in human history, most of that driven by industrial. So you add retail on top of that, and all of a sudden you've got, what could be potentially an explosive silver market. So we're talking in these meetings, like, how do we get our next silver ounces? Are we going to go buy it from APMEX here in the States, with all those premiums, or are we going to look for cheaper ounces? And what we figured out is we got to go find cheaper ounces in the ground. And that's going to be through these development projects. And you guys definitely, talking about your cash costs and where you're mining, definitely looks like you're going to be one of the cheaper ounces in the ground. And if you want your silver in the future, especially at any size, you're going to have to come to projects like yours to get it. Because I just don't see, the already minted coins being out there. They're going to continue to get more and more expensive.
That's right. No, I couldn't agree with you more there. So when you look at our sort of valuation, we currently have a market cap of, call it less than 200 million US. We call it 200 million US if you want, in terms of our current market cap, plus we have about 20 million in cash. So the true value of the project is being valued by the market at, say, 180 million US. We have 140 million ounces of silver equivalent in the ground already as of today. That number is going to grow when we come up with our updated resource. So we're trading at about $1 per ounce of silver equivalent in the ground today. So yeah, it's extremely cheap for highly economic ounces, and for a project that has a clear path towards production. I think we absolutely stand out from on that perspective. So it's much cheaper if you're looking for leverage, and that's why the torque on exploration projects or projects sort of near the development stage, like we're in, your returns could be multiples of the current silver price. So if silver price rises 10%, I mean, you could expect share prices in companies like ours and many of our peers could rally, significantly higher, like multiples of sort of the silver price increase.
Yeah, I agree with you completely. I'm very bullish on silver right now. It's probably my favorite investment for people, buying into the Teslas and the Bitcoins of the world. Those have had quite a big run. The valuations to support the prices they're at, really, I don't see them being there. So they're definitely in a bubble. When that bubble comes down, we don't know. But, in cyclical investing, we want to look for things that are undervalued. I think silver, even more than gold, sits in that sweet spot for being that undervalued asset, which is going to be in the next bull market run. I think you guys have a great project, that interested investors should be interested in, even at current silver prices. You guys are going to knock it out of the park. And I think we may have you guys come to the conference in August, so we'll look forward to doing more with you there. And for anybody interested, coming to that Money Metal Summit, asking you guys questions, I know you guys will be there with us.
Excellent. Yeah, very much looking forward to that.
Yeah, so great to have you on the program, John. We'll bring you back again. Let us know when you get some more news, and we'll release that out to people. The investors in my audience, certainly we have a lot of them that are interested in the mining stocks. We'll make sure that they get updates on that, and we appreciate having you on the program.
Oh, it's my pleasure. Thanks very much. I appreciate you having me.
Sure.